Imagine a bustling marketplace, but instead of fruits and vegetables, they trade stocks, bonds, and currencies. Picture the energy and excitement as traders make split-second decisions, buying and selling financial instruments that can impact economies worldwide. That's what financial markets are in essence. Platforms where buyers and sellers come together to trade these financial instruments. These markets are dynamic and ever-changing, reflecting the constant ebb and flow of global economic activities. These markets play a crucial role in our global economy. They are the lifeblood of financial systems, providing the necessary liquidity that keeps businesses and governments functioning smoothly. They facilitate the flow of money, enabling businesses to grow, governments to fund projects, and individuals to invest their savings. Without these markets, it would be challenging to allocate resources efficiently or to raise capital for new ventures. From the New York Stock Exchange to the London Metal Exchange, these markets operate around the clock, connecting investors across continents. They ensure that capital is available where it's needed most, fostering innovation and economic development. Understanding financial markets might seem daunting at first, but grasping the basics can empower you to make informed financial decisions. By learning how these markets function, you can better navigate the financial landscape, whether you're looking to invest, save, or simply understand the economic forces that shape our world. Let's break down these financial instruments and understand how they work in the broader financial ecosystem. Stocks. When you buy a company's stock, you're essentially buying a small piece of ownership in that company. As the company performs well, the value of your stock can increase. This means that if the company grows and becomes more profitable, your investment grows too. However, if the company performs poorly, the value of your stock can decrease, making it a riskier investment. Bonds. Bonds are like loans. When you buy a bond, you're lending money to a government or corporation. In return, they promise to pay back the loan with interest. Bonds are generally considered safer investments compared to stocks because they provide regular interest payments and return the principal amount at maturity. Commodities. These are raw materials like gold, oil, or wheat. Their prices fluctuate based on supply and demand. For instance, if there's a drought, the price of wheat might go up due to lower supply. Conversely, if a new oil reserve is discovered, the price of oil might drop due to increased supply. Currencies. The foreign exchange market is where currencies are traded. Here you can buy or sell currencies, impacting international trade and investments. Currency values fluctuate based on economic factors, political stability, and market speculation. Each of these markets has its complexities, and they are influenced by a myriad of factors including economic indicators, geopolitical events, and market sentiment. But understanding their fundamental nature is key to navigating the world of finance. By educating yourself about these instruments, you can make informed decisions and build a diversified investment portfolio. So how do these markets actually function? What are the mechanisms that drive the buying and selling of assets? And who are the key players involved in this intricate dance of finance? Trading occurs through exchanges, either physical or electronic platforms, where buyers and sellers place orders. These exchanges act as a marketplace, bringing together those who want to buy with those who want to sell. Prices are determined by supply and demand. When demand for a stock is high and supply is low, prices tend to rise. Conversely, when supply exceeds demand, prices usually fall. If more people want to buy a particular stock, its price goes up. This is often driven by positive news, strong earnings reports, or general market optimism. Conversely, if more people want to sell, the price goes down. This can be due to negative news, poor financial performance, or broader economic concerns. Numerous players participate in financial markets. Individuals. Everyday people like you and me invest in stocks, bonds, or trade currencies. These individual investors can range from small-scale traders to those managing significant personal portfolios. Companies. Businesses raise capital by issuing stocks and bonds. This allows them to fund operations, expand, and invest in new projects. Governments issue bonds to finance public projects. These can include infrastructure developments, social programs, and other initiatives aimed at benefiting the public. Financial institutions. Banks, investment firms, and hedge funds play a significant role in facilitating trading and managing investments. They provide liquidity, offer investment advice, and help manage risk. Understanding the interplay between these participants is crucial to comprehending market movements. Each player, from individual investors to large financial institutions, contributes to the dynamic and ever-changing landscape of financial markets. Financial markets might seem distant, but they directly impact your daily life. Your pension fund likely invests in stocks and bonds to grow your retirement savings. The interest rates on your mortgage are influenced by bond markets. Even the price of your groceries can be affected by commodity markets. Investing in the stock market, even with small amounts, can help grow your wealth over time. It's about participating in the growth of companies you believe in. Understanding basic financial concepts allows you to make informed decisions about your savings, investments, and overall financial well-being. Section 5. The global impact of financial markets. Financial markets are the lifeblood of the global economy. They facilitate international trade by providing mechanisms for currency exchange. They enable businesses to raise capital for expansion, creating jobs, and boosting economic growth. The performance of financial markets can influence government policies, interest rates, and even global economic stability. However, interconnectedness also means that events in one market can quickly ripple across the globe. The 2008 financial crisis highlighted this interconnectedness, demonstrating how a crisis in the U.S. housing market could trigger a global recession. Section 6. The risks and rewards of financial markets. It's important to remember that financial markets, while offering potential for growth, also carry inherent risks. Stock prices can fluctuate, and investments can lose value. Bond markets are influenced by interest rate changes, impacting returns. Therefore, diversification is key. Spreading your investments across different asset classes can help mitigate risks. It's crucial to conduct thorough research, understand your risk tolerance, and consider seeking advice from financial advisors before making any investment decisions. Section 7. Navigating financial markets tips for beginners. Entering the world of financial markets can feel overwhelming, but here are some tips. First, start small. Begin with small investments as you gain experience. Second, diversify. Don't put all your eggs in one basket. Spread your investments. Third, think long-term. Investing is a marathon, not a sprint. Patience is key. Fourth, do your research. Understand the companies or assets you're investing in. Fifth, seek advice. Don't hesitate to consult with financial advisors for personalized guidance. Remember, knowledge is power. The more you understand about financial markets, the better equipped you are to make sound financial decisions. Section 8. The future of financial markets. Financial markets are constantly evolving. Technological advancements are transforming the way we invest, with online platforms and robo-advisors becoming increasingly popular. Cryptocurrencies and blockchain technology are emerging as potentially disruptive forces in the financial landscape. Furthermore, sustainability is gaining traction, with investors increasingly considering environmental, social, and governance, or ESG, factors in their investment decisions. The future of financial markets promises to be dynamic and innovative, presenting both challenges and opportunities for investors worldwide. Section 9. Conclusion. Your journey into the world of finance. Understanding financial markets is a journey, not a destination. By grasping the basics of stocks, bonds, commodities, and currencies, you can begin to navigate this complex world. Remember, financial markets are powerful engines driving global growth, and they offer individuals opportunities to participate in this growth. As you continue learning, you'll be better equipped to make informed financial decisions and secure your financial future.